In this video, we will examine an installment note and see how you would go about calculating the interest by creating an amortization table. So here we have Carrot Company. They've obtained a $65,000 5-year 7% installment note from Everybody's Bank. The note requires annual payments of $15,853 every year on December 31st, beginning 2029, so the end of the first year. On December 2031, what would be the carrying amount or balance in the amortization table? So in order to get to that, that's a couple of years out, we need to prepare this table. So we start with, we have the dates, the amount of the payment. Note the payment is the same for every year except the very last year. It could be a little different because we'll adjust to close out the loan at that point. Interest rate is going to be 7% calculated multiplied times the carrying value, which is going to be the balance of the note. Some portion of the payment will be applied to the interest, some portion will be applied to principal. So initially we will have $65,000 full amount as the balance. At the end of 2029, the payment is made $15,853. Again, this amount's given to us. Now we need to calculate the amount that will be applied to interest. If you look up in the formula bar, you'll see that it is the $65,000 times 7%. This is for a full year payment. So $4,550 will be applied toward the interest. That means we're going to take the full amount of the payment, $15,853, subtract the amount that's being applied to the interest. So the amount that will be applied to the principal is $11,303. Now we'll calculate a new balance carrying value. So we had the $65,000. Let's type that in since my cell went away. And we want to subtract off that amount that's being applied to the principal. And the balance now is $53,697. Now let's go to the next payment. So the next payment at the end of the following year, 2031, would be $15,853 because, again, it's the same. Now we want to recalculate the interest. It's not going to be the same amount. We're going to take the new carrying balance over, you see it's highlighted here in the bluish purple, is $53,697 times 7%. We don't have to consider the time component because it is for a full year. So the amount that will be applied to interest is $3,759. So how much to apply to principal? We'll take that full payment, $15,853. We'll subtract the amount, and I'm just selecting the cell here you see to be D88. Notice D at the top, and then 88 is the number over on the left. So I'm subtracting that amount. $12,094 will be applied to principal for this payment. Let's take the previous balance. I don't know why it's doing that. Which is in F87. So I'm going to say equals F87 minus the amount being applied to principal. So we get a balance of $41,603. 2031, we're just going to work through this whole table and then we'll come back and answer the question. 2031, the payment, $15,853, is sent in. Now we need to calculate the interest again. Interest is going to be on the carrying value, which is $41,603 times 7% is $2,912. The full amount of the payment, $15,853 minus that portion that's allocated to interest, means that $12,941 will be allocated to the ending balance. Applied to the principal, $28,662. Now we'll go to 2032. The payment, $15,853, is made. The amount of interest calculated would be the $28,662 carrying balance multiplied times 7%. $2,006 would be applied to the interest. So we want to do the same thing we've been doing. Take the full amount of the payment, subtract the amount that's going to be allocated to interest, and we have the amount to apply to the principal would be $13,847 from the principal. So now we have a full amount of $14,815. Now we need to close out this account. Okay, for the last payment, so because we're adjusting it, we're going to zero out this payment in the end. We know that the amount to apply to principal has to be equal to the amount that is still owed, which is the $14,815. We still calculate the amount of interest as based on that $14,815 times 7%. So that means then the payment has to be equal to, this is the last payment, is equal to the interest amount plus the amount being allocated to the principal, so $15,852. And this does happen often on your last payment of an installment. So now we can answer the question. On December 31st of 2031, what would be the carrying value? So remember, the carrying value is this value over on the right hand side, the balance, if you will. So for 2031, that balance will be $28,660.